The post-election rally continuing as investors are encouraged by reports of a pro-crypto candidate to lead the CFTC, the Commodity Futures Trading Commission. Here with more on crypto investing strategies, we've got Chris Gannatti, who is the global head of research at WisdomTree. Chris, good to have you here with us. So just with the rally that we've seen thus far and now getting back above 100,000, it seemed like a psychological milestone. However, once again, there's a larger question of, all right, where do we run from here? What's your best kind of estimation and calculus around this?
Yeah, so it's been fascinating to watch as various things have happened in 2024. I know we almost forget about it because it feels like so long ago, but back in January, we had the approval of the Bitcoin ETF that was backed up by the actual Bitcoin as opposed to Bitcoin futures. And you move through the year and they do the same for the Ether-based ETF. So they've sort of through the year broadened the investor base. You don't necessarily need to do the wallet or do the more complicated things anymore to gain exposure. And then obviously you conclude with the election result where you nailed it, whether it's the SEC, the CFTC, various other policymakers, the spending and supporting of various candidates during the election. Crypto is a massive force, but we remind anyone we speak to, right now, it's about excitement, it's about potential, but all these people we're talking about, they're not even actually in the chairs yet. We've got to wait till January 20th and probably a little bit after confirmations, et cetera, before we really see that policy meeting the road.
From your own research, what has been the perhaps action thereafter? When we have this much excitement and this much kind of buildup, that's clearly looking out into the future and the potential of what a pro-crypto or a friendly to crypto type of regime could mean, but a larger question of how far out the investors and holders are looking at this juncture.
It's remarkable, and anyone out there that can think back a little more than 10 years at this point, it used to be that 10,000 Bitcoins would buy you a couple of pizzas. There's a very famous article that people can look up. The asset itself for the last 10 years has delivered more than a 50% annualized return, which basically means it's doubling roughly every year and a half. But at the same time, the volatility is almost 80% annualized. And at the worst point, and this is the tricky part, and this is why we see a lot of allocating within a portfolio, maybe a 1%, a 2%, a 3%, as opposed to, dumping all the money in there. Because at one point in the last 10 years, there was an 83% drawdown, which basically means $100 became $17 at a particular point. That's very difficult psychologically to live through. So there can be some huge swings in this asset.
When we think about what has been talked about on the campaign trail for President-elect Trump, building a strategic Bitcoin reserve, and I might add that the U.S. already has, by and large, the most Bitcoin holdings right now compared to other countries at somewhere around 200,000. So with that in mind, how are you looking at what could be added on top of that pile? And would it be purchased? Is this something that might come because of seizures? And how would the government go about that? And what do the existing holders of Bitcoin think about it?
I believe the existing holders of Bitcoin are basically thinking, and the podcast ecosystem, the media ecosystem, where you can find and read the writings and thoughts of a lot of these individuals. Anything that encourages more and broader based holdings of Bitcoin is a positive. Looking at it from a government perspective, it's one of these amazing headlines, the idea of a reserve of Bitcoin. But you start looking under the hood and you recognize that it's a far more difficult process. There are certain things President-elect Trump can probably do with a stroke of the pen, like executive orders. It doesn't seem like a Bitcoin reserve is one of those. It seems like there would be a lot of steps, a lot more complexity. Not to say it's impossible, but just there are certain easier things that might help the crypto area, for instance, in thinking about currently we only have the ability in two assets, Bitcoin and Ether, to actually put into the ETF structure. Maybe when the new people come on board, that broadens out a bit. So there's a whole spectrum of policies and things that can occur. A lot of them are far less complicated than a Bitcoin reserve. A Bitcoin reserve itself, when we see how they go about it, where they're getting the coins, I think from there, it'll be a lot easier to come up with those final conclusions.
Bitcoin trading at 100,000 right now. How much of a portfolio should be allocated to crypto from your own assessment?
What we tend to see is somewhere between 1% and 5%, depending on the needs and the situation of the investor. You're starting to see institutions even take the plunge and gain at least some exposure. It'll be fascinating. There are these institutional consultants that basically in the past came up with the quote unquote 60% equity, 40% bond allocations. Maybe one day they're recommending a 2, a 3, or 4%. They don't do it yet, but allocation to Bitcoin. At the end of the day, the key thing here is to manage the recognition that yes, returns have been remarkable, but at the same time, in a given 10-year period, you also have to expect you could see an 80% plus drawdown, and structuring the portfolio to be able to live with that is why you don't tend to see much more than 5%, at least in most cases.
Chris Gannatti, thanks so much for taking the time here today. Appreciate it.
Thank you.